Good morning, everyone. Not a good morning for some, that's for sure. Well, you know, things run too far too fast. This happens. So, a little bit of a surprise, I guess. The market has been resilient, and we'll see how far this gets. But a little surprised to see it selling off as it is here this morning. I guess it didn't bounce, so it's going down. And as it comes to this little support here, I'm starting with the NQs this morning. They got clobbered pretty good, obviously. And look at the size of that big red candle there. The morning started off with that gap higher. You don't see it here, but, on the other day charts, it gapped higher. Could I rise up? Surprising. It's coming low. It's right next to me. Anyway, maybe something's going wrong with this mic. I don't know. So, big red candle. And you see the run up here. I kind of talked about this yesterday. I did in the chat room. I don't know if we talked about it pre-market. Anyway, when you get these kind of moves where it's steady and it gets a little far from the 20, and obviously far from support, it opens up the door to bigger pullbacks. So now we've got that little run and it's sitting on support here, and you can see it's trying to stabilize there. We'll see how much success it has. And after that, we spread it out here. And the next stopping point, looking over to the left, is around 10,300. A little congestion area there. You see a little congestion area there. And that's what we look. We just look to the left and see where there were swing lows, right? PLs, pivot lows. What is a pivot low? For those that don't know, it's just simply a bar with 3 higher lows to the left and 3 higher lows to the right. Meaning it went down and it went back up. And so that level was rejected. Buyers stepped up. There was strong demand and it pushed it higher. And when you don't have any pivot lows, you see there was just one here, that means that there's been a momentum move and there is no support. And that's what we call a void. And that's what happened yesterday as things started to roll down and that level didn't hold. Well, and there was nothing to stop it. And of course, as we got closer to the end of the day, who wants to really get in front of there? Not many. So here we are at the next level. And we'll see what happens here today. I'm just reading Fabio's prior thing. 9 EMA. Well, I don't have a 9 EMA on here, Steve, but I do have support, price support. So as we go into today, we'll see how far it gets. And with a reversal like that, it suggests to me it's either coming down to that pivot high, which we call minor support, or maybe even lower. We take it day by day and we see how far things go. How, is it another big red day? So on and so forth. And in the lower time frames, at some point, it'll begin to stabilize and pop back up. And as intraday traders will try and take advantage of that and so on. And the weekly chart, of course, by the end of the week, we're going to want to see what this looks like, meaning this red bar could be a green bar by the end of the week, or maybe it's closing down here, which would be a strong indication of a short-term top and a pullback. And just notice there are no pivot lows here. There's no PLs. So there was a strong move up. And that when you have this kind of a chart, and it was a bit of a grind, it just didn't pivot. But when there are no pivot lows, like here, and creates that void, while that is strength, it's the weakest part of the chart, because as you could see what happened yesterday, there's no reference point. So those that are, got their, trend lines out, and this should prove to them that those fake tools of support and resistance, whatever they are, trader pivot lines, trend lines, fib lines, Gann lines, speed lines, whatever are really meaningless, when it comes and things are falling and there's nothing to the left. Because most of the time, those mirage tools, as I'll call them, are lined up with support. And those that are selling them will say it was my tool that did it, my trend line that did it. So how do they explain yesterday where things went right through it? And that's what started my questioning process, many, many years ago. And then the realization that all of these things are fake. Anyway, let's see where the rest of the markets are at here. S&Ps. This really looked like it was going to get through there. I explained this bullish pattern yesterday. I explained it in our letter videos, and I wrote about it. And one of the things I said was it better not fail. And it hasn't failed yet, meaning it hasn't traded below Friday's low. But this kind of a pattern is bullish. Historically, it works out really well. And this is a big doubt, of course, the rejection of that high and the depth of movement into Friday's bar. And if it breaks below here, I think we're going to see a waterfall drop down to the 200. You see where the 50 and the 200 is. And these are as subjective as drawing a trend line. They are. But why do we use them? Well, because every institution is looking at that. And they're looking at them. So, but when we have that converging of two major moving averages, we look to the left anyway and see if there's something real there. And there is. So this pivot low, right, this area that's held, it gets down there, that is going to be a stopping point. And so we'll just, when it gets down there, we'll see what kind of reaction there is. And pretty simple. And the Dow. And we look at all of these to see if they're in agreement or not. And that was also rejected, but it didn't go that far into the green bar. So, these kind of big reversal days have happened in the past. And look at this giant one. And it just led to a sideways correction over the course of several weeks. So we don't want to get too overly bearish right away, because we've got this support down below. And as I mentioned, with the S&Ps, they haven't broken through this yet. So when you have these reference points that are relatively close together, as these are, you're likely to get some choppy price action until they break through that and get into the void. And that's where the momentum then picks up, as it did in the NASDAQ, because that didn't have any significant support. So what is or was the strongest is going to have a greater tendency to fall the most when the selling begins, because there's nothing to the left. All right, Russell was the weaker, but it's got all of this mess of support and reversals there. So same story. Nothing changes. The charts change, but the analysis doesn't change. So again, Friday's low being broken. Well, there's another low right directly to the left there. But this kind of a shock where, I'm not going to go back to the S&P chart. As I explained, when you have a bullish pattern like that, and you have patterns like this where, it comes down and makes a low, and then it makes another low, and then it makes another higher low, and you have that agreement between markets, except for the NASDAQ, which ran too far. And, my thoughts over the weekend and yesterday were, well, these bullish patterns, they begin to outperform, and the NASDAQ underperforms. But it wasn't part of, well, everything falls apart tomorrow. Speaking of yesterday. So we don't know that it's going to fall apart just yet, but that's a pretty convincing reversal that we saw yesterday. We'll just see how far it gets. And And the same as yesterday, the NASDAQ and those tech stocks are going to be the most vulnerable because those are the ones that went up the most. All righty. Bonds up and should be up. They were rejected here into this resistance, and now, they're grinding higher here, which means interest rates are going down, which is not a positive, but I guess somewhat should happen, not expected, but should happen because of all this corona stuff and supposedly new outbreaks, so on and so forth. Who knows what's going to close next? And look, all of that slowdown has to mean worse earnings than what was already expected. We'll see. Oil down a bit here. Looks like it's starting to get that rounding kind of a top there. So if the markets fall apart, relatively speaking, this should start to come down as well. It's just typically the way it's going to be. Gold, just pulling back here a little bit, pretty choppy, so gold has been working its way higher. That has been what we've expected all along. But at some point, this is going to pick up momentum, and meaning you're not going to have these overlapping bars like this. You keep getting the buying on the dip. And so looking at this pattern, right, one of the things kind of can learn as far as patterns go is that, this is a pattern that we call a self-correcting uptrend where it's got overlapping bars and tails, but either way, that uncertainty displayed by that, it keeps working its way higher. Whereas the NASDAQ, that's no self-correcting uptrend. That's just buy every dip, buy every day. If it has a dip, buy more. And as it's to accelerate like that and creates that void and gaps up and just keeps going, opens up the door to bigger pullbacks. And for those that don't even think about money management and stop losses, it means excruciating financial pain. And there's probably a lot of people looking at what happened yesterday and thinking, what the hell do I do? Well, we can't help you now. So there you have it. The transports actually held up relatively well. We'll see what happens here today. I think I heard some of the airlines were lower. And so that's why we look at all of these markets. And assuming this correction continues, we'll see how much damage is done to the transports and the Russell, which have been underperforming. And that's what we do. Look at all these markets, look at individual stocks and sectors and see how everything unfolds. And I guess that's it for me, Dan. All yours.
All right, good morning. Yeah, that was an unbelievable last hour of sell-off yesterday. We got into a couple call spreads, but and so many overbought daily and weekly and monthly charts. I think we need to, I told you I wanted to short some stuff on bounces and call spreads on bounces, but I think we're going to have a field day of shorting call spreads. Let me go through opens just because of the gaps and so forth. AON put spread triggered here into the afternoon. FSLY was one of the call spreads we put on and looks great. We covered a half yesterday. Home Depot and Lowe were both beautiful, beautiful breakouts. So we sold put spreads on both of those. It's on support. So many things had a bearish close. LB. We did a little put spread. That one looks fine. Lulu. We did a put spread, and it didn't trigger in the morning, but it triggered over the doldrums here because I was going to go in and cancel it. But then I noticed it got filled there. Pizza, we did a put spread. That's the 85.81. So based on that one little print I see at 88, we still have $7 of cushion. XLF, we did a $1 wide put spread, and it's holding. You know, we'll look at the banks, but JP Morgan, I have here on the upper right. If that can hold in reverse 30-minute high, I actually want to sell a put spread on that. Zuo, we did a call spread, and that's looking great. So it looks like the only potential problem in the weekly options trader might be that Lulu, but we have the 300s. We have the 300, 290 put spread. Swinging options trader. And, you know, in the weekend letter, we made it very, very clear we were going to trade bullish patterns, but with an eye on the exit door because of the overbought or bearish sentiment, rather. And so we were purposely looking for short setups in our weekend scanning with the mentality of, well, it's a bearish pattern, number one, but number two, they're only going to trigger if they're weak, and they should underperform if the market does hit that exit door. So this was one that we found, and that triggered short yesterday. BKI is another one, triggered short, breakdown daily, weekly. Beyond were short naked calls. We did that actually on Friday, and that looks great. Gall, we've been in these short puts for a long time, and I tightened the stop yesterday. We're already out of half. IAG, a little gold stock, that I moved the stop under this bar. So the stop is 430. Oh, it's gapping under it pre-market, darn it. So we'll use a 5-minute low. Let me send out an alert right now. But that's still going to lock in a profit, so I'm okay with that. Stop 5-minute low. Telegram is awesome to communicate with our subscribers. Mattel, we bought stock yesterday. Beautiful wide range breakout. I mean, the patterns, there were so many bullish patterns yesterday. And then in the afternoon, in 1.5 hours or 2 hours, it sure changed that picture. We're long NDAC. And I was going to leg us into a cover to call, but it was too spready. NEP was a beautiful long. Can't tell where it's gapping. SMG was a beautiful, beautiful 1, 2, 3 setup. And finally, space. We have a put spread. So no actual disasters there. I mean, I think some of them are against us naturally, but no disasters. All right, Roku. Dan Allen, good morning. You got to tell me what you're looking at because I have no idea what to do with Roku. Wow, look at that beautiful M top. Momentum move, down, up. Let's see. I don't know why so many people have a hard time picturing M's and W's. This is right out of your alphabet, 3rd grade class. That's an M. It's not a Z. It's not a Q. It's not a B. It's an M. Oh, okay, no problem, dude. Insight. As a swing, no, you missed. It's down 3-4 days. You missed it. When we trade these M tops, we try to get on the on the turn at resistance. And here, just since we're talking about alphabet soup, this Wynn Hotel, that was a textbook W pattern, right? That's not a Z. That's not a Q. It's a W. And you get on board at the potent reversal. And so you could have done that right into the close on Friday. Look at that powerful 15-minute chart here. Actually right over these two pivots would have been your entry on that W bottom right there, folks. Right there, stop pre-market low. All right, just giving you some examples of patterns. Read, I just saw this little guy blasting off pre-market. McGraw, you know the answer to that, which is, I don't know, let me look at it. It's in a downtrend on the 15-minute chart. I'm just eyeballing this. It's about 50% retracement. It needs to reverse. It needs to, if it can hold here though, McGraw, and give us a bullish 15-minute pattern, or maybe 30-minute high, then yeah, it's a candidate. Yeah, so as long as it doesn't pretty much go down much more, a few pennies, and then reverses, yeah, it's a candidate. All right, Daku. So look at this, daily, weekly, and we said this very clearly yesterday in the green trading room. Look, this daily chart goes all the way back to September of last year, right? I'm just eyeballing these red bars. This is by far the biggest, ugly, wide range red bar, far from the 20. So, you know, I used to call it the golf course exercise. If my trading assistant just called me and I'm on the golf course and she says, hey, Dan, I got this crazy stock. It's rallied from $40 to $220. And it's the biggest red bar on the daily chart, far from the 20 in the whole year. I don't even need to look at it, just short it. So, and look at the weekly. That's what we call a climactic sell setup and potent reversal. It's beautiful. It's a no-brainer. I mean, the only part of the no-brainer is where to get on board and where's your stop. Let me put that one in more, that in the window. So, I mean, this, you know, this might even be a core short. I mean, the monthly is a climactic sell setup, topping tail. So I definitely want to watch this on a bounce to short either out of the money call spreads or the stock itself. This little guy, I don't know what he does, but he sounds like a bio. Big old gap breakout. We'll keep it on the list for a day or two. Disney, we actually had a put spread, and with the market falling yesterday, right on that breakdown bar. I didn't even wait for the low to get hit. I sent out an alert. Let's take our money. I was all afternoon tightening stops, looking for, you know, reducing long exposure, looking for new setups. Dunking here. Let's look for a call spread on this McGraw. You know, just eyeballing the 15, so the 33s right here. If we can get anything 33 and higher call spread, I like it. Goss 1360. Yeah, trade sloppy, but it's worth a watch. Oh, back to dunking here. Tomorrow in MT Live, we're going to be talking about bull and bear 1, 2, 3 setups. Here was one right here on 622, wide range engulfing, kind of an M top, right? And, you know, M tops aren't all identical, but that's an M top with a bear 1, 2, 3. See the inside bar in the lower third? That was a beautiful entry right there for call spreads and directional. ALT, 27 bucks, gapping up $2, but I don't, unless you just get a day trade, the daily's too extended for me. Overstock's another one that I want to watch as a call spread candidate. Extended daily, weekly with a bearish engulfing. 29.90, this thing's a big mess. API, recent IPO, but it's retesting it, and I saw it gapping up. We'll watch that for a few days. Wimmy, this has been a toy. I don't know what he does. Wow, look at this beautiful breakout last Friday. It's a toy stock. I mean, I refer not toy like Mattel, toy like for the day traders to play with. This one's gapping up 100%, so no trade for me. Spot, here's another one. And it got a downgrade today to sell, but we found this one yesterday as a bear call credit spread candidate, extended daily, weekly, bearish reversal, the biggest red bar in months. But now the entry is going to be hard. W, yeah, it could be a call spread candidate, but you know, I prefer the ones that are just vertical. Greg had a nice discussion pre-market about, you know, things that don't pivot. This thing did pivot. So this does have multiple levels of support, whereas Daku doesn't. Right? See the difference? Daku is just straight up. I mean, it does have some consolidation here, of course, but so just look at the weekly. There's not one single pivot on that weekly. XYL. XYL, Jason, gapping up to 71 bucks. Yeah. Yeah, it's just, you know, you got to wait for a 15-minute pattern. YouTube's asking about Romeo Hotel. That's been a strong retailer. It has to be over the high. It was another breakout failure, but yesterday in the morning with the market strength, I would have said, absolutely. I would have said that's a beautiful breakout. Had a little downside shakeout, snap right back. But now it's an upside shakeout. So now absolutely not. Nothing to do with it. RYI. Oh, did I forget to? Oh no, the car. Yeah, we bought 2 marijuana stocks yesterday. Same thing. Look, car almost looks like Restoration Hardware on the breakout. We bought that, and I moved stop break even. And it's in GTVIF, I forget. Yeah, that one. Look at that. We bought that yesterday. The stupid thing stopped us out in one day. Boeing here. Newspaper said they got an order from the government, but it's doing nothing. Ford is announcing their new Ford Bronco. But I mean, it's kind of a downside shakeout, 180 reversal. So that's actually worth watching. Mohawk, nothing to do with that. It was in the news, I think, some class action. Here, WFC, so that had earnings. That's a bearish gap. Yeah, the Wells Fargo, I just fundamentally just, it seems like they've